that are major benefits you get in your first year filing a Schedule C. And this is the reason you don't want to wait. You don't want to miss it. Welcome to the Sunlight Podcast. In this show, we're talking about taxes, money, and careers for self-employed people who have a big vision for changing the world with their work. I'm your host, Hannah Cole, artist, tax pro, and the founder of Sunlight Tax. If you're a creative or soul-centered entrepreneur or wellness practitioner who wants to grow your business sustainably, manage your taxes, and build a stash of fuck you money so you can control your time and have a bigger impact with your work, you are in the right place. Hello, I'm so excited to be with you today. All right, we're going to talk today about when your business actually starts, okay? And the reason that this needs some clarification is that I just see a lot of people get this wrong because there's a lot of different types of regulations that affect you when you're a business. And you may not be ready yet for some of the ones that come further down the road. But the really important thing to tell you, and the reason that I'm here on a tax podcast telling you this, is that your business starts way before you probably think it does to the IRS. Okay. And people really don't understand this, and they miss a lot of benefits they're entitled to because of it. So that's what I want to clarify for you today when your business starts to the IRS. And then next week, the episode I'm going to bring you is an order of operations episode. And that episode is also going to be super, super valuable to you because I think it's easy to get really overwhelmed by all the things you have to do when you start out in business. But the fact is, there are some you can't avoid and they are immediate, and you need to know which ones those are. But some of them you can wait, and some of them there is a later piece. It's fine to wait on them. So I think knowing the order of operations can really help take the stress out of your life so that you only have to focus on the things that actually need doing right now and not on all the things immediately. Okay. All right. So today, let's talk about your business and when it starts. All right. First of all, I think that what I see especially among creative people, but this can happen more generally, is that in the creative world, we often don't have as much training on business and taxes. And so we don't necessarily know all of the rules up front. And this is a reason that a lot of us, when we're doing things in business, can often feel like we are messed up, we are lacking. And it's actually really reassuring to get a little training because you often see, oh, I'm totally normal. Oh, I'm doing fine. And that's actually probably the meta message of today's show that I want to bring to you. You are normal and you are doing fine. So I think when it comes to starting a business, it's really important to understand that it always takes money to make money. You always have to spend money before you can have money coming in. And think about that logically, right? So a lot of people feel guilt about that or feel like they're sort of backwards or not doing good in business. But think about it. Think about like a pizzeria, right? If you're a pizzeria, you're not feeling guilt and horror over the fact that your pizzeria is not profitable yet before you've ever installed your pizza oven. Right? Like it's obvious to you when you run a pizzeria that you cannot produce a pizza until you make a baseline level of investment in having an oven to cook a pizza in, right? Buying ingredients, having somebody who's going to make the pizza, right? Probably that requires a physical space, right? So all of those things are expenses you have to outlay before you're even capable of bringing money in. In other words, I'm using this example to show you that it is totally normal to be spending money before you're bringing money in. And so if in your brain you are thinking, oh, I'm not a business yet because I haven't made money yet, I'm just here to say you're a business the moment you advertise. And that means you are a business as you spend that money to get set up. And it's really, really important to know that because when you're getting set up, you need more help. And the tax code's actually there to help you with that. There is a wonderful thing called startup expenses that you are qualifying for. And if you didn't know that, you would miss them. So it's really, really important for you to know you're going to spend a lot of money as you set up any business. And it's not because you're wrong or broken or bad at business. It's because that's just normal. There's sort of no way around it. Okay. The IRS definition of when your business starts is the moment you advertise. Okay. Please take note that that has nothing to do with dollars in or dollars out. It's actually more of an attitude. And that's important because it's attitude that defines a business in the first place to the IRS. Okay. Super, super important to know. The IRS, why does the IRS care about advertising? Advertising is the moment that you signal your intention to be open. It's the moment you say, okay, I'm ready now. Here's the stuff I have for sale, or here's the show I'm having in a gallery. Come see it, come buy my work. Or these are the services I offer. Come, do an inquiry call, right? Advertising, whether it's through Instagram DMs or announcements, making your website go live, applying for a grant, which is effectively advertising the fact that you are eligible to be given money for the amazing art that you make. Advertising is the moment you're signaling that intention to make money. So what's the IRS definition of a business versus a hobby? It's an intention to make money. The IRS's definition of a business is an operation that has a profit motive. Okay. And this is really important because people in creative or, quote, fun lines of work, we can get in trouble around the issue of whether we're running a true, genuine business or a hobby. So actually knowing that difference is a really big deal for us. So what I want you to know is what makes you a business instead of a hobby is having a profit motive. What's your major signal of profit motive? Advertising. There are other signals of profit motive for sure, like consulting professionals, like an accountant, a lawyer, attending professional development training, or getting training in other ways, keeping books and records. All of those things signify a professional versus a hobbyist, right? But the technical one that the IRS uses as the actual marker for today's the day your business started is the moment you advertise. So the reason that I'm bringing this up, the reason this is so critical for you is I see a lot of people miss it. A lot of people wait until they think that they don't get to file a Schedule C until they have money coming in. And that is wrong. You are allowed to file a Schedule C with all your startup expenses before a dollar comes in the door. The start date is your advertising. So if you incur a lot of startup expenses, but you're saying, hey, I'm open for business, you're entitled to those startup expenses in that year. Okay. I'm really hoping that that clarifies something for you that maybe you felt confused about. It's not about once you bring money in. It's not about once you break even. It's not about once you become profitable. It's not about once you have X amount of profit. Your profit motive is independent of that. You could start a business, and many people do, and it could completely fail. You could never bring in a single dollar, and yet you could have had every conceivable signal of a profit motive. So there's nothing about actually bringing in money that says you have a profit motive. It really is about your intention. Okay. Super, super important to know. However, nothing is going to prove that you have a profit motive better than actually having a profit. So of course, it's very wonderful for you to actually make it, right? Have a profit. And that's a whole other thing. But profit motive is actually independent of having an actual profit. So I just want you to understand the relationship between advertising and profit motive, and understand that your tax return, your Schedule C, you're eligible to file one before you have a profit, before you even have a dollar of income. Okay. Really, really important. And there's two things I just want to touch on before we end today that are major benefits you get in your first year filing a Schedule C. And this is the reason you don't want to wait. You don't want to miss it. Okay. Reason number one is startup expenses. There is a tax category called startup expenses that you are only eligible for in the first year of your business. Startup expenses exist because startup expenses are normal, right? You're not a weirdo. You're not a failure. This is a normal part of starting any business. So the way that startup expenses work under the tax code is you are allowed to lump together a whole bunch of stuff that normally you'd have to sort into different categories. So you buy a printer and paper and little office supplies and, all the kind of small admin things that you're going to need to get set up. You're allowed to lump them all into this category called startup expenses, but only in year one. You get to take up to $5,000 of startup expenses in year one as a deduction, just straight up. If the expenses are more than $5,000, you still get them, but you actually then have to kind of bundle them together and amortize them, which means take them piece by piece, spread out over 15 years. So if I'm just going to give you a little math to illustrate how startup expenses work, let's just say that I spent a lot on getting set up in my business. And depending on the scale that I'm operating at, I could easily do this. So let's say I spent $20,000 in startup expenses. Well, in my first year Schedule C for that business, I would get to take $5,000 of that right off the top as a deduction immediately this year. The remaining $15,000 of startup expenses, I would have to amortize over 15 years. In other words, I would get that remaining 15,000 out of my 20,000 1 year at a time. So I get 1,000 of it this year, 1,000 of it the next year, 1,000 of it the next year until 15 years was up. Okay. So that's how startup expenses work on the technical side. The second thing you do not want to miss in a Schedule C in year one is a checkbox. There is a little list of questions right at the beginning of your Schedule C. And one of the questions asks you, is this your first year in this business? And if it is, hit the checkbox. Don't miss it. Because one, it signifies that you're eligible for startup expenses, right? It's a signifier about your eligibility. And two, there's never a free pass from the IRS. You could always be audited because that's the check and balance in our system. So that those chances always exist. But it does kind of show the IRS algorithm that you're in that year where typically people don't have a profit. So I don't know how the algorithm works, but I would suspect that there's something about the algorithm that says we're going to kind of not audit as many losses in the year one as we would in subsequent years of any given taxpayer, because year one is the year that everybody has a loss. It's so normal that it's not worth putting people through that. Okay. So don't miss the checkbox. Startup expenses and that checkbox are your major reasons that you want to be sure that you file a Schedule C in the first year that you're eligible for it. And the second thing is just that you are allowed to take a loss. So the title of the Schedule C is profit or loss, not profit only, profit or loss from business activities, right? Which means a loss is okay. Losses do happen and you're allowed to have them. When you have a loss, that loss gets subtracted off of other income in your tax return. So it acts effectively like a tax shelter. Now you need to be very careful with these. You don't want to take losses too often. You want to try to minimize them, right? Because of course you're trying to make a profit, right? You have a profit motive, but it is a tax shelter. It is a tax advantage for you. And it's one that the IRS expects you to be taking in the first year. And so it's a terrible time to miss the opportunity, because that provision in the tax code is there for small businesses like you and me, so that we get cash back in our pockets on that first and most difficult year of business. Okay. So there's a lot of benefit for you built into the tax code. I don't want you to miss it. All right. Those are the things I want you to understand. Your business has already started. It starts the moment you advertise. You are normal when you have a lot of expenses up front, even well before you have any income. In fact, it makes sense. You have to build the infrastructure of a business before the business can operate. And by operating, bring in money. Okay, so that's normal. And then last, in my summary, you want to always make sure that you capture year one, because you get startup expenses. And you get this wonderful checkbox that says, this is my first year in business, which is kind of a little alert like, hey, this is the hard year for me. And the IRS, it signifies to the IRS that this is your hard year, and also that you're eligible for those startup expenses. All right. So next week, I'm going to do an episode on your order of operations. So I'll be talking about LLCs, S corporations, business liability insurance. Don't freak out. You do not have to do every single one of those things at once. And that's actually why I'm doing the episode. It is to help calm you down so you know there's certain things to take care of up front. And here we are with the number one, the Schedule C. Yes, the Schedule C starts earliest of all the things, but there are other things that come further down the road, and you don't have to stress about all of them on day one. Okay. Last thing I want to tell you about is just that I would love to buy you a coffee. If you've been listening to the Sunlight podcast for a while or only just for a little bit, I would love to hear from you. I have decided I'm going to buy a coffee for everybody who's willing to fill out a 5-minute survey for me. You can get that at sunlighttax.com/coffee. If you fill out that survey, and you have to leave your email so I can email you a QR code to get a coffee for yourself on me as a thank you. But I'm asking that if you fill out a survey, it's just asking you like, how long have you been in business? Are you just getting started? What field are you in? And what are your favorite episodes? What kind of length of episode? What kind of topic? What are the ones you've loved the most in the past? Is there anything that drives you crazy? Do I talk too much in certain parts? I'm looking for really honest feedback because I really, really care about making this podcast as valuable for you as I possibly can. So to say thank you and to express my gratitude for you taking 5 minutes out of your life to give me some honest feedback about how this podcast is serving you and how it could serve you better, go to sunlighttax.com/coffee and fill out this 5-minute quick multiple choice survey, and coffee's on me. All right. Thank you all so much for listening. I hope you have an awesome day. Bye. Thank you for listening. If you like the show, be sure to subscribe, leave a review. It really helps, and share it with a friend. I'm so grateful. This podcast is for education and entertainment only. Nothing in this episode should be taken as individual tax or financial advice. You can find all the tools, books, and links we reference at sunlighttax.com/podcast.